Which stock is the better buy, Meta Platforms or Snap? I'm going to answer that question in this video using several different critical metrics to compare the two social media stocks, so let's get right into it. First, let's look at their price declines in 2022. Meta Platforms stock was down 64%, while Snap stock was down a whopping 81% in 2022, both of which had a difficult year, and they're hoping 2023 will be better. So let's look at the next metric, which is revenue growth going back before 2019. And what you could see is a steady downward trend for both of these companies. And Snap in the orange was always a little bit ahead of Meta, and that gap widened in after the outbreak. They experienced a little bit better growth, I should say a lot better growth than Meta did in terms of the top line. And most recently, Snap grew revenue at 5.7%, and Meta experienced a revenue decline of 4.5% in the most recent quarter. Both of these companies are experiencing macroeconomic headwinds and headwinds from Apple's privacy policy changes that makes it difficult for them to show targeted advertising, and that specific factor makes marketers less willing to pay for advertisements on their platforms because they're not getting the precision that they were used to. So less precision means less efficiency and less effectiveness for marketers, and so they've pulled back the price per ad that they're willing to pay, and that's bringing revenues down. But also the Russian invasion of Ukraine is causing marketers to reduce spending to kind of evaluate what's going on. And the macroeconomic headwinds from rising interest rates and falling consumer spending online is another headwind that's causing revenues to come down. But all of these factors are impacting both of these companies, both Meta Platforms and Snap. So they're hitting them, and it's, you could see here on the chart, revenues coming down for both of them, and it's largely due to the factors I mentioned earlier. And also one other factor is TikTok is gaining market share and taking time away from people spending on Meta and Snapchat, and they're spending more time on TikTok. And that's another factor to add to the ones I already mentioned as a cause for these revenues that are falling. Next, let's look at the operating income on the top here. And what we see is Meta Platforms dominating Snap in terms of operating profitability. Meta is incredibly profitable, several quarters above 10 billion in operating income. In its most recent quarter, 5.66 billion in operating income, whereas Snap has barely achieved profitability in only a few quarters. In its most recent quarter, negative 435 million in operating income. Looking at the operating profit margin in the trailing 12 months, Meta has consistently delivered excellent operating profit margins, whereas Snap is showing really good growth in terms of expanding its or reducing its operating margin losses. You could see that moving higher, but they're still negative 24.6%. But as they've grown their revenues, as they've grown their user base, they've done a good job of reducing the percentage of losses in terms of operating profitability. So they're demonstrating economies in scale here, which I like to see from growth stocks like Snap. Next, let's look at the free cash flow yield, and Meta Platforms again consistently ahead of Snap here, growing its free cash flow yield to a peak over 8% and still really good at 7.2% in the most recent update here. And Snap, again, like with its operating profit margin, its free cash flow yield showing nice economies in scale here, positive 0.91%, growing from a negative at the peak loss of near negative, let's say 14% here, and growing all the way up. So it's making really nice progress. Flatlining here in the recent 3 or 4 quarters, but it's over the past several years showing nice progress in achieving positive free cash flow yield. Finally, let's look at their valuation. Looking at the price to earnings forward, Snap is trading at a 26 PE forward, where Meta is at 16.94. And then looking at price to free cash flow, Snap at 109.9, where Meta is at 13.86. Snap nearly 10 times more expensive than Meta in this metric, and certainly more expensive in terms of Meta in the price to earnings forward ratio. So, given all of the things we covered earlier, to answer the question, which one is the better buy right now, I'm going to say Meta Platforms with its better profitability, better free cash flow yield, and lower valuation. I'm going to go with Meta Platforms right now. All right, that's all I've got for this video. Thanks for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.